Good morning, everyone. Darius Dale here to present our macro minute for Friday, January 21st, 2022. Starting with markets, we have stocks down, commodities down, crypto down, dollar down, global bond yields down. Sounds very much like a deflation day, which obviously started yesterday afternoon into the close. Big movers this morning. We have the DAX, Germany's DAX index, copper and WTI crude oil down 2% apiece. Bitcoin down 6%, Ethereum down 8%. So it's feeling pretty painful out there. On the economic front, when taken in conjunction with the sharp increase in building permits growth, yesterday's existing home sales data continue to suggest that supply demand imbalances in the U.S. housing market are ameliorating at a faster pace in recent months. So we had existing home sales that slowed to minus 7.1% year over year in December. That's the lowest print we've seen since June of 2020. And then also, thus far, Omicron is not having material impact on supply chains in Asia. When you look at Korean exports, that accelerated to 22% in January. January to date, these are preliminary figures. That's the fastest growth rate in a couple of months. With respect to today's probable range setups, you're getting an overbought overbought signal in silver. Sorry, currency volatility and 10-year tip shield. You're getting oversold signal in DAX and S&P 500. With respect to S&P 500, it's still neutral VAMs. It's probing the lower boundary of its probable range with 7.6% upside. But as we talked about in our macro bundle Q&A on Wednesday with Brent Kachuba, founder and CEO of Spot Gamma, we say, hey, look, there's a lot of eyeball premium starting to build. Dealers are short Gamma. And ipso facto, you're definitely not going to want to be buying the dips this week. If anything, you're going to want to wait till we get to the other side of OPEX, potentially the other side of next Wednesday's FOMC catalyst. So 42 macro subscribers are well aware of that, and they didn't chase yesterday's highs. And then taking it to the chart here, even though the SPY, again, as I mentioned, is at the lower bound of its probable range, this is not a time to buy the dip. And we continue to see this eyeball premium in the SPY. So let me take a step back and explain this chart. The x-axis, we're showing the 1-year Z-score of 2-month 25 delta skew as a medium-term option sentiment. On the y-axis, we're showing the 30-day put implied volatility at the money put implied vol as a percentage ratio relative to the mean of 10-day, 20-day, and 30-day realized volatility to sort of gauge sort of near-term option sentiment on the y-axis there. And we continue to see a build-up in implied volatility premium in the SPY, in U.S. equities, and broader risk assets in general. There's 26 ETFs in that sample, 50 in this sample, 9 in that sample. And so that with dealers being short gamma into OPEX, it's telling you, hey, the price of these options are continuing to increase. They're got to chase that from they're being pro-cyclical with their hedging activity, their delta hedging activity. So that's exactly what you're seeing in terms of the market response here. I wouldn't extrapolate that well into kind of this well into Q1. I think we need to get to the other side of OPEX the early part of next week. You've typically seen these sort of flushes into Monday morning, into Monday afternoon, and then the rallies start from there. We obviously have the Fed catalyst next week that may prolong this recovery process. But again, we'll continue to update our subscribers on all the signals that we're watching to say, hey, look, if this thing's turning into a crash, and we have 4 very important, very highly technical, very repeatable signals that we produce in our leadoff morning notes every morning that will help investors and help us decide whether or not to actually make the pivot to raising cash. But for now, holding the line. So getting back to the probable ranges, WTI bullish FAMs minus 6% of downside versus 5% of upside. Bloomberg Dollar Index, neutral VAMs minus 0.8% of downside versus 1% of upside. 10-year Treasury yield, bullish VAMs minus 11 basis points of downside versus 16 basis points of upside. Bitcoin still crashing in bearish VAMs minus 5% of downside versus 14% of upside. Ethereum still crashing, bearish VAMs minus 8% of downside versus 20% of upside. And then gold neutral VAMs minus 2.9% of downside versus 1.1% of upside. So with that, Darius Dale presenting our macro minute for Friday, January 21st, 2022. I know we went a little long today, but when the risk management, when they call for risk managers, the risk managers have to pick up the phone, and I certainly fancy myself one and want to help as many people as I can with our repeatable process and tools. So come check us out at 42 Macro. Cheers.